Hi, it's Matt with EquiPredict Analytics. Thanks for tuning in. In this video, we're going to be taking a look at an update on the S&P 500, the fixed cycle in the S&P 500. This is a follow-up update to the May 26th video we did on that fixed cycle in the S&P. And again, just briefly, if you're enjoying some of the content we're providing, please do subscribe to the channel. You can also head over to our website, EquiPredict.com. We've got a lot of information over there regarding market forecasting. You can read up on a few different articles that we have unlocked. We also have some new forecasts from Microsoft, Netflix, and a forecast for tech stocks versus dividend stocks that we just posted for our subscribers over there. You can learn about our subscription model as well as our green, red, and blue wave proprietary forecasting models that we use for dynamic cycle forecasting in various markets. So it's EquiPredict.com. So up on the screen, we've got our fixed cycle in the S&P 500. And just as a brief recap, what we've done is taken a look at, essentially, we picked an anchor back in August of 2024, and we chose the first cycle, which was simply just around 30 to 35 trading days later, in September of 2024 as the first cycle low. And then this is a fixed cycle. The blue lines that you see here don't change. They are static. They just are exactly where they stay. They don't adjust. But what you're going to see is this cycle is actually quite relevant in the S&P 500 and quite prominent, I should say. And what you're going to see is that many times this cycle hits a low just perfectly, even going back in time. This is only back to October of 2023 and so forth. So you're going to see that for those who are kind of new to the channel, is that whenever the price reaches one of these troughs here in the cycle, generally it gives a boost and then it kind of repeats itself. I won't go into all the details. You can take a look at that May 26th video to get all the details on how these fixed cycles work in conjunction with the price action. One thing you will notice, just as a recap, is that I do have gaps in between the candlesticks. That's because I use a time calculation as opposed to a trading day calculation. So what I'm doing is using all available calendar days, including the weekends, because in my opinion, futures have a significant impact on how the trading week is going to unfold, and so these gaps here, although they don't include the S&P 500 futures, they are still in play, especially Sunday night starting around 5 p.m. Eastern, I believe. So that's why you see these gaps in between the candlesticks. If I turn them off, you'll see that the gaps close. All right, so each one of these candlesticks is a trading day. If I include the time, all calendar days, you're going to see those gaps appear. So I do the fixed cycles if I'm looking at them using those weekends and those holidays as well. So what we're doing is we're going to fast forward here to where we are today. We're going to kind of zoom forward. You can actually see, again, you can see the anchor here back in August in the first cycle in September of 2024. You can see how well the fixed cycle does play with price action here in March of 2025. It was a cycle low. If you had purchased there, you break even at the cycle high. So right now what's happening is a little something different. The cycle might be altering, it might be changing at this particular point in time. I don't think there's any reason to adjust the cycle just yet, but you can see actually that just back in April of 2025, this fixed cycle low hit that strong, 9 or 10% gain day in the S&P 500 just perfectly. And again, this is using the anchor from all the way back in August 2023. So we're going to leave the cycle the way it is right now. And here's where we are today. This is the trading day ending Friday, Friday, June 20th, 2025. And what you're going to see is that we actually have meandered sort of into it. We've actually risen a bit from this cycle low to this cycle high to this cycle low. The stock exchanges, the markets have really gone nowhere. So there's obviously some potentially exacerbating geopolitical headlines at this particular point in time. This could drive this particular point in time downwards in terms of price action. One thing I will note is we have a proprietary indicator down here that's essentially at its core a momentum indicator that's really kind of giving us sort of a warning signal as we head in to this particular point in time in the cycle, given the fact that if you look very carefully, that the indicator is just barely below the early June low here in the indicator. So momentum is slowing as we get into this. So what could happen is, I think, a couple different scenarios really too. I think we could see sort of a drop into this and then a rise up into this particular cycle low, maybe mid-July, and then another cycle down towards the end of July. If the market absorbs the headlines fairly well, we could actually see sort of a rise going into mid-July from here. So that's kind of where we're at right now. Just something to be aware of, that we are at a cycle low. The market has not collapsed into it, and it's sort of meandered into the trough here in the cycle. And from here on in, I would exercise caution. Our subscribers are well aware of some of the forecasts that we publish for some of the larger name stocks out there that are indicating that right now it might be a time to just watch and wait for the moment going into July. However, we may end up being quite bullish. So hope that all helps, and good luck and good trading out there.